All right. Good morning, everybody. Hopefully, everybody is having a fantastic week. We got some Bitcoin being very sideways and slow and boring, but there is opportunities in this market. You just got to know where to look. We're going to talk about some of those opportunities today. It looks like Bitcoin's looking for a lot more of the same here this morning. You are testing yesterday's midpoint, so you could see support here, but we saw intervention, central bank intervention in the form of the BOJ, and we saw, or we heard rumors because nobody has come out and, not that I'm aware of, officially said, yes, we have injected blah, blah, blah amount of dollars to support the yen, and Bitcoin has still done nothing. And if you just go look at like the NASDAQ, which is the tech heavy sector, the last couple days, this thing has been on an absolute tear. All right. Now you can call that, is it convenient that this is happening? Or was the Fed intervention or intervening in the end part of the reason why you're seeing move higher? I would like to assume that it's probably the latter, right? I don't think that it's. It looks good, right? You got fresh all-time high breakouts on the S&P 500. So I have to look at this as a pullback opportunity. Now, Wes said something in the Discord this morning that is very, very important. We do have NFP tomorrow. NFP is a very big day in the markets, so you could see a lot of volatility, a lot of chop. Could also see a lot of chop today going into that volatility. What I'm looking at here this morning, I'm going to be looking for a long on the NDQ or on the NQ. This is the micro futures contract on the NASDAQ. If you have more money, you want to trade the E-minis or the bigger contracts, go right on ahead. But if we can take this low out and then stop going lower, I will get long on the NQ. If we continue to push under this low, which is right at about 360, then I'm going to set back and leave it alone for the day. And then another area for opportunity this week is gold. I don't know if you guys are aware, but gold is breaking out. Let's go pull that up. I've already started getting involved in gold by selling puts. I sold puts to get me on the long side of gold because I honestly thought we were going to see a liquidation of the lows. So I essentially sold puts to get under the lows, so that way if gold broke down, took out the lows, I would be able to get filled on the shares on GLD. You can trade gold futures with leverage. Obviously, leverage is going to make it more difficult to get involved on a longer term gold play. If you want to start buying gold, now is the time to start buying gold. If this Middle East debacle settles down, right? So if that continues, then China turns back on the gold money machine and gold continues to rally. Another thing that China has done is they have essentially made it illegal for Chinese citizens to participate in shorting gold via the futures or options market. So now they can only buy bullion. So we could see another macro larger move here on gold. Now, that's not to say that you're not going to make new lows from here, right? Because nothing is a guarantee in this world or in this market. But we have seen a ceasefire or whatever. It's maybe not a ceasefire. Anyways, China is going to start, getting their economy moving again. That, in my opinion, and other analysts' opinion, is bullish for gold. So essentially, as long as gold is above the 50-day exponential, I will continue to look to position long in gold. Now, I can't tell you if the lows are in. So could we see, next week or for the rest of this week, lower prices on gold, and then maybe next week or a week after, lower lows? Yeah, it's possible. You're testing the yearly opening range right here. It's a big ass level. As long as you're under this, you're bearish on gold. I really love that you set the yearly lows down here and you've been grinding on those yearly lows and nothing has happened. So it looks like support is in. All right, support is in. The Fed is going to have to hike, most likely. They didn't hike last Fed meeting, but most likely they're going to have to do that. They're going to have to hike, and that's going to be bullish for the dollar. So I wish I could say that Bitcoin is done, right? I wish I could say that the lows are in on Bitcoin. I've already started buying Bitcoin, and I may be, unfortunately, a little bit early. And I don't think it has anything to do with Fourier cycle theory. I think it has everything to do with the Fed. I have been telling people since this channel started, specifically, if you want to be invested in Bitcoin, you must watch the Fed. If the Fed is getting ready to tighten monetary policy, then obviously that means more lows could happen on Bitcoin. So I have shorted it. I have been trying to hold a short position on it. I have to extend those puts out in time, it appears, because they're going to most likely have to hike this year. The market is now only signaling one hike because the Fed moves very, very slowly, but still signaling a hike nonetheless. If you ask AI how often does the 2-year predict what the Fed does, AI is going to tell you that it's an 85% probability. So as long as the 2-year is moving away from the Fed funds rate to the upside, that means most likely the Fed is going to have to raise interest rates. That would be bearish on Bitcoin, not bullish. Now, cut aside the macro picture with the Fed. You have BIP 110 people starting to signal this Saturday. Now, that's not going to be the end of it. You're not going to get a decision on what's going to happen until a couple weeks. But the signaling officially starts on Saturday. So Saturday, we could see a rise in volatility on Bitcoin. A rise in volatility isn't bullish for Bitcoin, unfortunately. Let me make this the whole screen. This is the Bitcoin Volatility Index. And the Bitcoin Volatility Index is at all-time lows. All right, you're at an area where we have seen spikes out of this area before. And generally speaking, you want to see your asset on highs, or if not on highs, at least in the range of highs. Right now, Bitcoin's in the range of lows. So that's not a great sign, guys. It's not a guarantee, but it ain't a great sign. An explosion in volatility is going to force prices lower on Bitcoin. So if I pretty much am expecting lower lows, then I definitely should be getting my shorts situated. But the more leverage you take, the harder it's going to be to catch this move. How low? That's impossible to know. That's impossible to know. But it does appear that things aren't working out for Bitcoin. Now, where would I stop being bearish on Bitcoin? Where would I not just stop being? I am ultimately long-term bullish on Bitcoin. I just wish that the government would do a lot of things to help it along. They're not. So until they do, it is what it is. But I don't like the BIP 110 stuff. I do not like that. It's not good for this market to have infighting like this. It is definitely not good for this market that you have Michael Saylor stuck and has been stuck for a minute. He will have to sell if Bitcoin continues on this bear market, and if this bear market has got any serious legs to it. So we're going to find out one way or the other if the Fourier cycle theory is dead. And we're going to find out this year. You want to know why? Because this year is the Fourier cycle. So in four-year cycle market theory, the lows should be in by November. Well, if the Fed isn't even started to hike yet, and if the market's forcing their hand and making them have to hike in the future, that should be bearish for Bitcoin. So if Bitcoin continues to make lows going in past November and into December, then it's not the four-year cycle, it's the Fed year cycle, right? So just be careful out there. Make sure your risks are mitigated. Always, always, always. The people who mitigate risk are the people who eventually get this stuff and then become financially able to take care of their own futures. You can do that too. You just got to quit gambling, using the market as a casino, Will, because that's not what it is. It is totally a way to fix your future. You don't even have to be a genius. I mean, the U.S. has not been a capitalist society since, I don't know, the 40s. I mean, you can argue that it's been more of a government decides what the markets do type of thing. You're in a K-shaped economy right now. So the rich are getting richer, the poor are getting poorer. Well, the poor, instead of buying lottery tickets, could invest. But nobody wants to invest because investing takes a long time and everybody wants to get rich now, blah, blah, blah. But anyways, things aren't looking great for Bitcoin. Things are looking great for gold. I'm not a gold bug. I'm not a bug, period. I'm a trader. It's my job to find trading opportunities. Right now we have one, and it's on gold, unfortunately. Gold is rallying. So we're going to see if gold can hold support. I will stop being a buyer or stop being a long on gold under, say, 37, right? Anywhere under there, and then downside continuation, then maybe I'm wrong on the gold rally, but we'll see. If you get above the yearly opening range, I don't see any reason in the world why you couldn't be a bull on gold. Now, we aren't macro on this channel. We're technical. We follow the charts. Price is king. And right now, gold has not shifted its daily time frame into a bull market yet. You're still in quote unquote a bear market. You're under the yearly opening range, so you are still bearish. However, I think the time to be a dip buyer has come. So I think it is time to start looking to be a buyer on lows. And that's what we're going to do. Right now, we're making lows or a fresh day low on the NDQ or the NASDAQ futures. We're 15 minutes in before we get the bell to the New York session. I'm going to try along. You can see here my P&L. I'm already down $169 this morning. I woke up during the London session and tried to buy what I assumed would be the London session low. That did not work out. So it may not work out again here, but we'll see. I've done really good on the NASDAQ this week. I'm up way more than I'm down. So we're okay there. On the hourly time frame, you can see you're getting pretty oversold here. You're obviously more up than down on this asset class. So we'll see if it wants to go lower. Maybe tomorrow is the best day. Or maybe this spike was just that, a bullish spike, and you're getting ready to see a bear market. I doubt that, but we'll see. It looks like the U.S. government is pumping technology and all that. So until that breaks, I don't see any reason to be bearish. Unless you're just trying to catch tops. And if that's what you're doing, you're going to most likely lose a lot of money before you ever finally call the top. Calling tops and bottoms is a YouTuber / Twitter person game. It's not for someone who lives and pays their bills through market profits, right? We have to trade the charts and price. So I'm not looking to buy the low here, because like I said, I can't. Give me 1 second here. Something caught my attention. And anyways, I've been trying to short Pingu for a couple days, and it has been not working out. Unfortunately, Pingu has been very choppy and slow, but it is refusing to break out. And we still are below the 200. And as long as we're below the 200 on the 4-hour time frame, I have to be bearish, unfortunately. I wish crypto could get above this average. It just can't. And because it can't, I got to be bearish. So I have a short and I chased it. I think the better entry for the shorts is about the midpoint of the last candle. So 62.05 is the price. So if I eat a stop here, I'll try it one more time up in this area, and then I'll be done with it. Because if it gets back up here, it's back above the 200, and I have to see if it wants to escape out of this range. You don't need a trend line here. You can see that it is clearly wedging up. The moving average is the trend line. You know what I mean? It is wedging up. You are building an ascending wedge, and a lot of people look for bullish breakout potential on ascending wedges. And because it hasn't gone anywhere in a long time, you could see a volatile spike to the upside, and then it could roll over. You could see a volatility spike to the downside, and then it could roll over. But as long as Bitcoin is the leader in this space, and as long as volatility is on the lows and Bitcoin is on the lows, I have to be more prepared for a volatile spike to the downside. I own Bitcoin, so I will participate in any upside rallies that it gets. Right? So I want to be positioned for the short, though. And I also want to look for that on Pingu, as I think Pingu is a garbage token, and it could potentially be over with now. Pudgy Penguins is the NFT this follows, and I don't know if you're aware, but NFTs have not been a thing for a couple of years. So right now it's just traders that are making this market go up and down, not so much investors. And a lot of retail has left the space anyways. They've went to the gambling markets. So now it's mostly traders, but that's what I'm looking for. Most likely I will eat a stop here. My stop is only going to be $60 if I get filled. And then once again, I'll try a short, like I said, up at around 63. And then that'll be my last time on that. We're going to be only long biased on NQ today. So we're going to be watching the current day low. If we look like we're going to start putting in the low here, we're going to potentially look for bullish rallies. I can't be a seller because the market is not bearish. I only want to sell bearish markets. This is not bearish. I do not have a moving average on this, but I can get you one if you would like. And we're probably going to sell more puts on GLD and trying to get into a long position on this. I don't want to miss it, but we'll see what it does. It's trying to build in support on the highs. I hate buying on the highs like this, but at least it's pulled back out of overbought. You do have a huge resistance here, so I mean, this could take a few days before it actually does break out. But I mean, 42.44 could be a long. It would be a very aggressive long. I would much rather get long, say around 41.55. I think this would be an aggressive long. So we may just do the put sell, but only like a week out. We're not going to go far out. And MNQ is not pulling back on the mid yet. So this may want to go lower. We know that they were going to intervene by about $10 billion. He said buy on the note that he had. If you watch Saturday's upload, there was a note that he literally wrote buy 5 to 10 million yen. So that way, you know, reporters could take a picture of it. And so he could get it out there without getting it out there. wink, wink, nudge, nudge type of stuff. So could that have already run its course? Maybe. But as long as the midpoint of this big ass candle holds, I want to be bullish. Your daily RSI is at 52. Whenever you're holding days above the 50, we look at that as a bullish signal. A bearish signal would be to take out yesterday, or not yesterday, but the day before's low and break down. That would be bearish. We would be bearish again. So if we're getting ready to start a new uptrend or a breakout rally on the NDQ, we want to look for that. We want to be getting long. All right, we got 9 minutes until the bell. Still very bearish here. Want to only be on one contract. Well, we'll start with one and then we'll size up if we need to. Today could be choppy and I don't want to get chopped up. Here's all my positions. This is a real money account. It is not a paper account. It is real money. This portfolio is mixed. I am taking trades in it. I was only going to use this money in this portfolio in a long-term investment portfolio to kind of show people that you can just buy stocks and hold them and do okay. And most of the stocks that I own are dividend paying stocks, right? So the biggest loss right now is coming from MO. It is a tobacco company. They own Marlboro and a bunch of other brands. So we're watching it. We're continuing to watch it. If it breaks down below the 50, we're going to bail on this. I mean, the 200, sorry. Obviously, you've already lost the 50-day exponential. This is in an uptrend. It has been in an uptrend for a little while. There was a bearish scare Q4 of 2025, but it ultimately rallied, got back above the 200 and held, and has been in an uptrend ever since. So we see no reason for that to stop just yet. But if we do start closing days back under the 200, we're going to shed that position from the portfolio. There's no point in holding something that looks to be done. It has been chopping in this area for quite some time here. And see here on the monthly, it looks really good for a potential breakout and a longer term rally. So we're going to continue to hold. We haven't seen any reason to be a major seller yet. There is a monthly bearish engulfing there. That is a sell signal. Last week is a bearish engulfing on the weekly, and you closed under the 21. So we are seeing signs of weakness. We are seeing signs of a potential lower move coming. Well, I'm just going to hang on to it for a little while longer. And right now it's holding. So, but these are all the things that I'm watching. I'm not in all of these. We're in MO, VZ, VG, KO, ARCC, and then STRC. Unfortunately, if Bitcoin starts making fresh year lows, I don't know if that's going to be good for STRC. Thank God we only own 57 shares of it. It's way too volatile right now to put serious money in it, in my opinion. I will be wrong, obviously, if Bitcoin stops making lows, which would be a really good sign. You can see you haven't gotten back above the 200 day on this just yet. So it looks really good here, and I'm really glad that it rallied out of this pattern instead of breaking down. So far, it looks okay. But I do believe that if Bitcoin continues to go lower, that could have ill effects on this. Right? But this is, like I said, a very small portion of the portfolio. But anyways, we are trading in the portfolio as well. We're just not going to be super aggressive in the trades. We closed out the SPX, or I closed out SPC. No, it's still open. What did we close out yesterday, guys? Oh, we closed out IWM and we closed out GLD because we were up nicely on those. Here's IWM, nice breakout, all-time high. Now it's pulling back. Of course, your top pickers up there trying to pick a top. We'll see. We'll see if they're right long term. I don't think they are, but we'll see. So I'm going to leave IWM alone for now. Euro pound, another one that I've been looking for to roll over, is finally starting to do that. I've been stopped out of a couple attempts on this, so I'm very pissed off about this. But yeah, you almost have a bearish engulfing day on there, which is a really good signal for shorts. Obviously, if the dollar holds support, which I think it will, because nothing has changed on the macro. The BOJ intervened, the Fed intervened. You saw that weakness. Is that enough? Are we going to see continuation out of that? I doubt it, because the macro has not changed. The interest rates are set the same. Now, could you argue that the bearishness started because the Fed was not going to hike? Yeah. Yep, you can say that. And then you can say the injection from the BOJ and the injection from the Fed gave it a little bit of downside. But ultimately, we believe that's a buying opportunity. The best way to buy this is USDJPY. So we think that this is ultimately has been a buying opportunity. Right now, we started to buy 8-hour support. So far, that's been holding. I anticipate it will continue to hold because it is expensive to hold long-term shorts on the dollar. I think that's the reason this thing has been going up for the last 5 years. So longer term, we want to be involved in upside, not downside. Now, if we get a shift in the federal banks or the central banks, we get a yen or a BOJ hike, and then we get a Fed rate cut, obviously that shifts the macro backdrop. And then we would be more, okay, maybe we are going to see more downside on this. But because nothing on the macro has changed, we think any pullback on this pair is a buying opportunity. That pullback was a very deep one. Looking at all of 2026's data, the entire year, you retested almost down to the 786 retracement of 2026's range. That's a very deep retracement. So essentially you've wiped out all the gains going back to March. We think these buyers will come back. So I want to be looking for longs on this for the long-term buy and hold until the macro backdrop shifts. So buying support on this is what I'm going to be doing moving forward. There isn't really a trade here today with NFP tomorrow, but I want you to be more on my longer term macro backdrop for the DXY is bullish. And until that changes, I'm more bearish on the near term on at least Bitcoin, right? Because the China economy is kicking back in, because China no longer buys and trades futures. I think that could help gold be bullish, even if the dollar is bullish. Now, obviously, dollar bullish can put downside pressure on gold, but only time will tell if that has a long-term effect on gold. We do have potential support here. So we'll go ahead and try a long at 336. We may have to chase this a little bit. I don't want to chase it. The only reason we're buying this is because we're treating this as a midpoint retest. It could continue to break down today because tomorrow's NFP. So we don't want to try too many times. All right, so we're going to make sure we don't lose too much money here. Let's drop this. There's your low of day. So let's just put a stop right there. And of course, we ate a stop. Now let's give it a minute, see what it wants to do. It looks like it wants to push lower. I think we're going to see a pop soon. Timing it could be difficult. Wait, I'm long 2. I only got out 1. Gotcha. We got to get out on 2. I accidentally dropped a buy in there. We're long, dumbass. You need to be selling these. All right. So fresh lows are happening. We're breaking down. It's squeezing. We're going to have to stop this punishment at some point, right? Let's drop it down here. Just give it a little bit of room. We're okay with another $200 loss. I don't like it, but it is what it is. Let's just go ahead and get out of this because I don't want to get massively squeezed. Down 355 today. That's okay. I had a couple $500 days this week. That one sucked, though. Not gonna lie. All right. Probably going to leave this alone. It's probably going to bounce soon, but we don't want to get too cute with this. You are trending at this point. So things have taken a turn here. You're testing the 50 on the 4-hour. The NASDAQ is extremely volatile. It can move. But this is still ultimately bullish. Wes's downside target got hit by a lot. You also have an old daily swing high right there. But I don't want to get too chopped up. The better trade may be tomorrow. Nasty move lower there on that 30-minute. So I fumbled the positioning. That happens occasionally. We're going to give this a little bit of time to see if the low's done. You got any questions, just drop them in the chat. I will get around to answering them here in a little while. I just do not want to lose track of what I'm doing here. So I'm going to give the NASDAQ a little bit more time. We're only 4 minutes since the open, so there's no point in rushing this. All right, let's go take a look at GLD. Let's see. I don't want to get too focused on a scalp. Okay, it looks like the low's probably in here. So let's go ahead and get 280. We'll do 2 more contracts at 280. No, let's do 1 contract on mid. We'll split the difference here. 307. See if we can get in down there. We may have to. That's the problem with NASDAQ. If you miss it, you missed it sometimes. It's a pretty big spike. I hate looking at the 1 minute, but all right, let's do. Yeah, I like 300 for the entry. So last time, this will be the last time I try to get long this. Probably not going to get filled down there though. All right, let's bump this up a bit. That's a wide freaking stop loss, man. That's 100 points. That's the problem with the NASDAQ. If you miss it, you freaking miss it. Yeah, we kind of figured it was going higher. I can't chase it all the way up there, dude. We'll try it here and then we'll come back to it. Unfortunately, that's the way it works sometimes. Sometimes you miss them, sometimes you catch them. But, I mean, on a 1 minute, there's no foreseeable place to get long there. That is just what you get with the NASDAQ. Crazy volatility like this. Because leverage makes it too painful to sit in a losing position. We do good, usually. We have more winners than losers. So eventually we will catch it. I'm going to pull up GLD real quick and go ahead and get a put sell going over there. GLD is a very liquid asset. That's why we like trading it. We've got what? Let's try the 375s. We're okay with owning 375s. We'll go out to Friday of next week. 375s don't have much premium on them, do they? All right, so if we're okay with that, let me flip this back over. I can't stand looking at the options chain upside down like that. I like to look at the options chain where numbers go up, right? If numbers go up, it just makes more sense to my brain. But some people like looking at it like where number goes down. To me, the higher the number goes, seems like it should be going up. But I know it's not the way a lot of people look at it, but it's the way I look at them. All right, so I want to be, let's get something out of it, right? Let's go up to a 34 delta. We'll sell this one here. And we're going to go ahead and take that, get it working. Because longer term, 385 would give us a retest of what? Let's see. Nope, wrong indicator. The 50, right? We would be retesting the 50-day exponential. Massive gap under. So even a midpoint gap fill would be 380. So I'm okay getting filled at 385 on the shares on GLD for the long-term hold. So if I'm okay with holding 100 shares at 380, then obviously I'll take the 385 put sell now. I don't want to buy it just yet. Like, I don't want to just jump in with levered shares because this thing can be volatile. And volatility is hard to, set in with leverage. But 100 shares of this longer term be a nice little hold. I definitely don't think gold is going to zero. I'd be willing to own it as low as 377. If I could get a pullback to 385, this is where I would first be looking for longs. And then the lowest I would be looking for longs down here. I think it's time to start. But remember, you got resistance overhead, so it could come back for gap fill. It could also just break out and start running. I don't think that's going to happen, but it is possible. Anything is possible. Right now, you're seeing weakness in the dollar. That could be why you're seeing a little spike here. The true test for gold will be if the dollar starts rallying and gold continues to rally. In my opinion, that would be the true test that, yes, it is time to be an investor back into gold. Nice bullish pop, though. That's what we want. We've been waiting to see on Bitcoin, and it just hasn't been able to do it. All right, back over to the NASDAQ. It doesn't sound like we've taken a fill over there, so we've probably missed it. Yeah, we've missed it. Bastard. You are what you are. All right. Let's go look at the 5 minutes, see what we got. Pretty aggressive pop off the lows there. So 350 is about as high as I can go up. I cannot chase it because it could pull back all the way down to here and do pretty much what this candle did, right? Make me set in a nasty loss. I don't know that it's going to go up, so I can't do that. You know what I mean? It could literally roll over and continue to go down all day. You got to trade smart. You can't trade dumb. Last support zone is 350. So if it's truly going to go up, you shouldn't get another push under 350, or at least a close under 350. If we get a close under 350, we know we're wrong, right? The 350 is where we're going to get it. That's way down here. That'd be the last chasing price. 350, 350. Let's go 355.75. That's fine. We'll try to get in there. Oh shit. No, we're gonna have to go up 370. Damn it. All right, 370 it is. Sorry, if you bought or put in a limit at 350, get rid of that limit. We're going in 375. Do not be trading if you can't afford the risk, all right? Obviously, I can. The stock buying power on this account is $112,000. So clearly, I can afford a $300 loss. 1% on this portfolio would be $1,000. I am trading small relative to account size because I know losses happen. They always happen. We cannot predict the market. Okie doke. With that being said, we'll give this a little bit of time, see if it wants to fill, but we will keep our eyes peeled. Let's go take a look at Pingu as it's starting to bounce here. So remember, resistance, if you get up above that, we have to let it go because at that point, it is signaling a potential breakout. What we want to see to be mostly right would be a rejection here. I'm out of the short on Pingu for now. I'm going to see if I can get it at like 4-hour supply or at like 207. So I'm going to put a limit sell at 61.75. I'm going to start small there and then add if I have to add. All right, limits out. If we get a push up, we'll catch it. If we don't, we won't. I don't really want to chase this because as you can see, it hasn't really been giving us any opportunities. It gives you these short bouts of where you get downside continuation, but most of what we've been seeing is a lot of this, right? A lot of this chop slop. I don't want to be involved in that. I only want to be involved if we're about to see something like this. And with BIP 110 happening on Saturday, I want to be ready to catch something like this. I am short Bitcoin already. And because BIP 110 is happening on Saturday, we could get a nasty move on Bitcoin. because Saturday is a thin liquidity day. My shorts would be stopped out if you get above this blue line. And that's not that significant of a pop from here. That's literally a 3% pop. So if Bitcoin only gets up here, I'm stopped out. Could it liquidate this swing high before then rolling over? Yes. But I would be watching that. So if we don't get that violent spike higher, or if you do, I would keep an eye on this swing high. That's only a weekly swing high. It is not a monthly swing high. Right there. That's your last liquidation point. So in a sense, August, the month of August, would make a fresh monthly high and then roll over, because there's your July high. This is not a monthly high. You've got your July high right there, and then that other weekly swing high is hidden inside this candle. You've already got your breakdown here. The blue line is the 50-month exponential moving average. As long as Bitcoin is under that, Bitcoin is signaling a potential drop or a lower low. Until price gets back up here and closes multiple days above this, the price chart is showing you that there is potentially fresh lows coming. Now, you can make the argument that there is accumulation happening here, and I would agree with you. So I would probably stop being bearish if we see bullish continuation above June's high. I don't think you need to go up there. So until we're like back up into these regions, I have to be positioned for the downside move. Now, in terms of today looks really good. You're finding a higher low above yesterday's low. That's a good sign. It does look fine today. Looks like it wants to go a little bit higher. But vol is up today. Volatility was up yesterday too. 2 days in a row we've seen volatility move up. It's not spiking hard yet, but it is moving up. It is hinting that people are taking insurance out on Bitcoin. But it is time to start looking for insurance. Yeah, we're probably going to miss the NASDAQ. Yeah, that's not coming back. Oh well, it is what it is. I won twice this week. Today will be a loss on the NASDAQ. I'm not chasing it all the way up there. So cancel any orders you have on the NASDAQ. We had the right market direction. We just were too early, and that happens. Okay, did we get filled on the GLD position? We did. Nice. All right, so at least we've got some risk on gold. It's not the risk I want to have. I want to be in gold. So we will try to buy gold once gold gives us a pullback day. What would that look like, just in case I'm not live that day? Because I only go live twice a week. I go live every day and for the Discord members, but for the public, I go live twice a week. Let's go look. I like looking at the gold index instead of GLD because GLD has gaps. But yeah, I mean, pullbacks, you want to see basically what you're seeing on the NASDAQ today. You want to see the midpoint of this candle hold. Now, could you trade under that midpoint briefly intraday? Yeah. Could you close like a 4-hour under it? Yeah, it's possible. So you'll have to be, it's a wide range. You know what I mean? Typically speaking, if this bullish breakout is real, we don't want to see any daily closes back under the 21. right? We don't want to see this pop above the 50 be a trap. Could it be a trap? I don't think so. The last traps that we saw on gold, you got up to like 54, 55 before rolling back over. I'm looking at the RSI down here, not the price chart. I just want you to look at the RSI. See how you get like up to 55, 57, and then it breaks back under. And then right here, you broke out above the 55, but you couldn't really get anything going. And then you rolled back over slowly, chopped around for about, I don't know, 3 or 4 days there, and then fell back under the 50. This is what we're watching. We don't want that to happen. If that happens, then this right here was a selling opportunity and the bears took over. We're still really close to these lows. Yesterday was a really good day on gold, but it was the first day. It's day one of this potential bullish rally. Now, unfortunately, if you miss day one, sometimes it makes it really hard to get in on day 2, 3, 4, and 5. If it's really, really going to be bullish. Which it could be. Hence the reason why we're selling puts for now. And then, you know, we'll try to get positioned when we get a period of a few days trading sideways. Like if we could get 3 days in a row where we don't do anything, that would be chef's kiss. Because then we could focus our entries close to a prior day low. When you're trading up here at the prior day's high, it makes it too risky to buy it because it can pull back. So we want to buy it on a pullback day. You're not getting that yet. Secondarily, we want to also keep our eyes on this, this is copper. I don't consider copper as a precious metal, but it is a metal. And if you look at this on a monthly chart, this thing is on fire right now. And it's breaking out to fresh highs here. There's no reason for that to stop on a macro backdrop. You were consolidating here for 3 months. Consolidating for 3 months, breakout. Consolidated 4 months, breakout. You know what I mean? So, yeah. As long as copper's trading above this candle's low, I think you have to be more bullish on metals. Now, this is a monthly chart. Copper is extremely volatile. I'm not buying copper. I'm not getting involved in copper. I'm just saying, as long as copper looks super bullish like this, and since the China economy is getting spun back up again, that's why we have a bullish bias longer term. We'll use technicals to kind of get positioned. But yeah, this looks really good for upside continuation. All right, going back down here. So we'll have to watch for pullbacks. We'll have to be patient, and when we get them, we'll buy. We'll be buying. Buy. I think it's time to buy. All right, Bitcoin, what's it doing? A whole lot of nothing. You're an inside day still. Of course you are. Where's the week open? So we're above the week open, but still inside last week's range, under weekly supply. Yeah, I mean, if Bitcoin can't close a 3-day above 65,350, I'd be a lot more bearish. This is just a bullet. This is a dead cat bounce or a short covering rally. Nothing more. Still in the range. Good morning, Heath. Good morning. Good mornings. Good mornings. Told y'all gold was going to go up. I don't remember you telling us anything, but we'll take your word for it. I don't know that gold is going to go up. All the signs point to the most probable scenario is gold is going higher. The U.S. economy right now is doing fine, but the Fed has got its back against the wall. And the Fed controls Bitcoin, and the Chinese Fed, or the PBOC, controls gold. That's been a widely known thing inside of financial space. It is what it is, right? Everybody knows that. But China has done something different now. They've disallowed their citizens to partake in gold shorts. So there's no reason that gold couldn't make fresh all-time highs. Not this year, but in the future. I don't think gold will make fresh all-time highs this year. But it is time, whenever you see a long-term consolidation like this in a bullish asset and have a bullish macro backdrop, you should be looking to be a buyer. We were sellers of gold back here because it needed to pull back, right? It needed to pull back. It got way too frothy. It was way too just bullish. Needed a pullback. And then the US invades Iran, and then China has to slow their economy down because they have to tap into their oil reserves. China slowing their economy down is the only reason why there wasn't a massive issue with the oil market. This is also a reason why we were not looking to buy oil at $120 a barrel. But, now things look okay if the U.S. could get their shit together. When I say the U.S., I mean Donald Trump. Because if you poll the U.S. doesn't want us over there. It's only Trump. Trumpity Trumper Trumpster. It's his second term, his last term. So I don't know why he's over there. There's no sense in being over there. The China and the U.S. are in a capital war, right? So China is in charge of the gold market. China wants gold to go higher. And as long as they don't have to tap in their oil reserves, they can spin their economy back up. China spinning their economy back up will be good for gold. And now that it's illegal for Chinese citizens to short gold via options or futures, there's no reason why gold can't eventually break out above all-time highs. I just wouldn't be looking for that this year. Could it happen? Of course it could. But I wouldn't be planning on that happening. But yeah, as long as support is holding, as long as you are no longer trending down, you can partake in gold rallies. We had to keep people on the cautious side once we broke down into fresh year lows. Because when you're putting in fresh yearly lows, you are in a downtrend. Right? So you don't necessarily want to start being a buyer while a downtrend is happening. You want to wait for a bottom to be put in. Then you want to see a bullish response. You've gotten that. This is a bullish response. Though it does appear that people are still looking for higher prices on gold. So, yep, now it's time to start looking for that to continue. Eventually, the 21 will act as support. I don't know if it'll be this week, next week, or 50 weeks into the future, but I do know that eventually the 21 will start to act as support. And I would love to be long before that happens. 4106, I keep a bullish bias on gold. And that, even with a dollar long bias, I still have dollar long bias. So right now I'm heavily positioned in dollar long trades. I am short euro dollar for the long term. I am long USD Swissy for the long term. And now I am long USD JPY for the long term. It's too expensive to short this pair. Now, there's still quite a bit of volatility on the near term, so you could see big, gigantic candles. You don't want to try to get involved when that's happening. You want to try to get involved when you have small candles. Like this, small ranges. Yeah, baby. And watch your closes on the higher time frames. You want to see higher closes. You want to see these lower closes be respected. You want to see signs of an uptrend again. Right now, sellers are still trying to short this because they're looking at big down move, so must be going to 112. You know what I mean? They're looking for a lot more downside. But retail is getting a lot smarter nowadays because data is so readily available everywhere and so easy to get. They're starting to make some better decisions. We couldn't be a buyer above 160, so we weren't. Because the threat of the BOJ intervention was out there. We knew that. So we wanted to wait for a significant pullback and BOJ intervention. We got that. We don't know how much more the U.S. is going to intervene. So we still have to be cautious, but we ultimately have a bullish bias. I would love to buy this at fresh yearly lows. I don't know if you're going to get that much. Now, tomorrow, if you get a very negative jobs number, that could cause a lot of downside volatility in USD JPY. So be very careful. Make sure your risk is mitigated. Make sure you have stop losses in place just in case, you know, some news event causes a volatile spike. But longer term, bias up. Oh, sorry. Let's go here. I'll show you rollover rates on your USD JPY. So rollover rates are a very good indicator for long-term positioning because big money sits in long-term positions. So this side over here is longs, this is shorts. So if you want to be a short on USD JPY, you're paying $2.24 per day right now to hold that short on 10,000 contracts. That's not a lot of money. That's $20 a day per lot. Per lot. $20 a day just to set in a short. That's what you're going to have to pay. Or you can make, you know, $1 a day holding a long, or $10 a day holding a long. Seems like it would be an easy choice to make, especially with the market literally pricing in rate hikes, which is typically bullish for the DXY. The 2-year is signaling a Fed rate hike. And according to AI, that whenever that occurs, it is right 85% of the time. But if you go out to December, you can see that there is a 43% chance that we're setting at 375 to 400. That is a rate hike. Now, the market is no longer signaling in it is still a strong probability that you get 2 rate hikes this year. But notice how that 2 has backed off. Because volatility is elevated, the VIX is up, it makes it very difficult to price things out 30 days. So as of right now, there is more of a probability that you get a rate hike in September's meeting. So I would assume the month of August, the dollar will price that in. But we'll see. Obviously, I could be wrong. Just make sure you have stops out. And unfortunately, that's not good news or great news for Bitcoin or the rest of the crypto market. Unfortunately, rate cuts is what Bitcoin and the crypto market likes. Injections of Fed liquidity. That's what Bitcoin and crypto markets like. So until we start seeing that, I mean, Kevin Warsh has also said that he's going to tighten Fed injections. So he's trying to control the near term yield. He knows the back end is blowing out right now. He's trying to do the best he can with what he has, right? He's only got 2 tools, essentially. And the tools that the market is telling you that it doesn't look good for crypto. I wish the BIP 110 stuff wasn't overhead as well, but it is. It would be silly to continue to think that Bitcoin is going to, go to all-time highs this year. If it does, that would be against everybody's. Like every analyst on Wall Street would be scratching their heads. Like, what just happened? I mean, it is possible, but highly unlikely. I wouldn't put that trade on. We'll see what happens come November, December, but hopefully Bitcoin is at this price come November, December. And hopefully it isn't, I don't know, say in the 50s or the 40s. That would be terrible. Right? That would be absolutely terrible. But we are protected in case that happens. We are protected. We have on shorts. If you are not protected, if you only hold Bitcoin longs, you can protect yourself either using futures, which I use weeks. The exchange weeks, link in the description if you want to use it. You don't have to. You can use any exchange you want, but that's what I use because they were friendly to US when other exchanges were not. That's why I use them. But I also obviously can short or buy puts on IBIT, BTI. There's so many Bitcoin ETFs nowadays. You can buy long-term puts. And if you do it on IBIT, they're cheap. They're cheap. You can go out 2 years, a year and a half. Let's say that's 6 months. But just going out to January, you could put on cheap puts to protect yourself. Now, you don't want to buy more puts. Like, you want to make it to the point to where if it does have a severe breakdown, you're protected. You're still going to lose money, though. Right? You're not trying to stop yourself from losing money because ultimately we think Bitcoin goes up higher long term. So you definitely want to be more long on the back end than short. But on the near term, things aren't looking great. So you want to use a portion of your portfolio to hedge against the downside. Do that by buying long-term over a half a year, up to a half a year, but longer if you want. You could go out a full year. June 17, 2027. Obviously, it's going to get more expensive, but the plan is that eventually you don't need that, right? Eventually that Bitcoin, those puts expire worthless. That's what we want long term. Yeah, it looks like we've completely missed the NASDAQ here. I would not be a bear on the NASDAQ today. However, it could be a choppy day. It could trade as an inside day all day. And it's not doing that. I mean, you've already taken out yesterday's low. So you're not an inside day. I wouldn't be looking for a gigantic breakout today. I think if you do get a breakout, it'll be tomorrow and on good news. NFP is tomorrow. I probably will not go live tomorrow for the public because we're not anticipating that NFP is going to have a really huge effect on the market. We've already heard the Fed speak. We already pretty much know what the unemployment rate is. There is no change expected in the unemployment rate. So naturally, if you get a giant spike up, nobody thinks that's happening. Wall Street is really good at predicting this stuff, guys. Okay? So if your favorite YouTuber is telling you, oh, 4.8 or 4.10 is coming tomorrow. Yeah, right. Right? 4.2. So 4.3 or 4.1. Nothing. It's a nothing burger. But this is happening, so keep your eyes open and be aware of the risks. We still have not gotten a fill on Pingu yet. So we might have to lower our entry. This thing just isn't moving. It is a thin market. There is no liquidity. To continue to expect big moves is... I mean, BIP 110, that's the only reason. If it wasn't for BIP 110, I wouldn't even be messing with the crypto market right now. I wouldn't even be dealing with it. There's just nothing happening. You have a few that are spiking occasionally. So if that's your kind of style and trade, then have at it. I don't do that. I try to catch the easy money or the most probable money. Very slow, very small intraday ranges. I mean, we've been seeing 1.5, 2.5, 3.5 on a good day. Pingu, when it moves consistently, 5, 6, 7% per day is easy. We haven't seen that for a long time. So to anticipate that happening every day is not great. It's not a great plan. It's just causing me to lose money. Farcoin is essentially dried up and not done anything either. But Farcoin is at least rolled over from the 200 on the 4 hour. This needs to be moved. Yeah, it's lost the weekly VWAP. Still up on the week. Funnily enough, Farcoin took out last week's high, so we probably should have been looking for shorts on Farcoin at last week's high. That would have been a good trade in hindsight. But Farcoin has not been doing anything for a long time, so we've kind of just not been looking at it. And now that we started looking at Pingu, it stopped moving too. Farcoin is looking like it wants to roll back over. I wouldn't be expecting a big trend on crypto in either direction right now. We're just looking for the entry just in case there is a big move because of BIP 110 this weekend. And then, like I said, there'll be about 2 weeks after Saturday. 2 weeks. Here, if you guys aren't familiar, just follow this guy right here. He will help you out in understanding BIP 110, what it is, what you can look for. You don't have to agree with his policies or his politics or anything like that. I only follow him specifically for the BIP 110 info. He is a very good person to help you understand what is BIP 110, why is this happening, blah, 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 right? He does a good job explaining all of that. Bitcoin University. And then you can stay up to date as to what's going on the technical front when it comes to the inner workings of Bitcoin. You don't have to. You can just simply watch price, which is a lot of what we do, but just watching price on the near term can be stifling, especially when price is stifled. Price is stifled right now because there's so much headwind risk. Saylor himself is headwind risk. I like that Bitcoin didn't sell off when Saylor sold again this week. That was kind of good. I would really love it that in 2 weeks, right? You come back to my channel in 2 weeks, say last week of August, first week of September, Bitcoin is still inside of 60K. That would be the best possible scenario, in my opinion, and could be bullish longer term, even if the Fed continues to hike interest rates. Because that would indicate that bad news isn't affecting Bitcoin anymore. That would indicate that the sellers are done. All the people that want to sell have sold. So that would be good. I just, unfortunately, I got to prepare just in case that isn't the case. Because I am heavily invested in Bitcoin. It's about 10% of my overall portfolio. That's a big percent. It's too much. But I'm looking at it, it's for my kids anyway, right? The Bitcoin that I own, I'm going to be giving it to them. I don't use Bitcoin to pay my bills. Maybe someday in the future, but as of right now, the people that I owe bills to, like cell phone companies and vehicle insurance, things like that, things that you can't buy that you have to pay every month, those people don't take Bitcoin yet. When they do, I will pay in Bitcoin. But that just isn't the case right now. I would love to pay them in Bitcoin. I have a lawyer, right? I have a financial guy. He does my taxes and stuff. Both of those two people are different people, and I pay them handsomely. And both of those two people, neither one of them take Bitcoin. I've asked them if they would accept Bitcoin as payment. Their answer was no. So yeah, as of right now, Bitcoin is a trading asset for me. I think once everybody accepts Bitcoin as payment, Bitcoin's at $1 million, $2 million per token. Right? And I think people will in the future accept Bitcoin as payment. But right now, this year, this quarter, this year, there's a lot of risks out there for Bitcoin. And they're severe risks. If Saylor has to become a seller, which he said he wouldn't, but he's already sold. He's sold 3 times now. Once he only sold 10 Bitcoins, and when he did that, Bitcoin literally dumped. On the news that Saylor was selling 10 Bitcoins. You lost the 50-day exponential here. Bitcoin puked. Then Saylor sold what, like 1,100 Bitcoin or 1,300 Bitcoin, and Bitcoin didn't really do anything on that news. Well, he sold again last week. Bitcoin really didn't do anything on that news. So that's good, but we definitely want Saylor to stop selling Bitcoin. He's still net long, obviously. He owns 800,000, so when he sells a couple thousand, it's not really going to matter. But still, the fact that he is selling, period, is showing the market that he is in a very precarious position. By selling, the last round of selling has now brought his cost basis down to 75,419. Hopefully he stops doing that. Michael Saylor, if you're listening, the best thing that you could do for the Bitcoin market is shut the up and get off of freaking X. Stop talking about BIP 110. Just shut up. Be a CEO, bro. And shut your mouth. Like, get out of it. You own so much of it. Here's the thing, though, guys. BIP 110 will be the reason that Michael Saylor sells. He will say, because he has taken the other side of the BIP 110 argument. He has taken the suit side of the argument, not the pleb side. Because he has settled himself over on the suit side, if BIP 110 causes a sell-off and Saylor is forced to sell, he will blame it on BIP 110. So he is positioning himself to shift blame. He needs to just shut up. Get out of the public space. We do not, even the plebs hate your guts now because you've taken the opposite side of their emotions, which Bitcoin is everything to a pleb. You know what I mean? To a person that runs a node, to a person that truly believes in Bitcoin is the savior for money, for humanity. Those people hate Michael Saylor now. So good job, Michael Saylor. But yeah, hopefully it doesn't destroy Bitcoin. And I don't think it will, right? I don't. I think this will just be another FUD story in the past. Bitcoin ultimately goes on to make fresh all-time highs. Not this year, but in the future. And everything works out just fine. That's why I am not selling my Bitcoin. But I am protecting myself. I am protected. If Bitcoin collapses, it is what it is. But I still will lose money. It's not going to be a net for me. I will lose money. And I will lose a significant amount of money. But I will be fine. I will still be able to eat. That's the way I want you guys to position. I don't want you to have everything in one asset. It has changed a few people's lives investing like that. But so many more people have changed their lives by being diversified. Okay? Put your odds on the side that does better, longer term. Diversify. All right. Let's see. Let's find some trades. Enough of the soapbox. Let's go find us some trades. Okay, what did I do yesterday after the live stream? Let's go see. I put on a very small UNH trade yesterday, 15 days out. I sold a put spread. It was just a very small trade. Nothing major. Just putting positions on. I can't predict the market. Nobody can. So if you put on a bunch of small trades across of a bunch of different asset classes, there's a lot of data that proves that longer term you will be successful, because even a monkey can throw darts and pick winning trades. So we trade small, we trade a lot, right? So UNH position, we'll see how that one plays out. What else did I do? I put on a long-term hold on NLR. A long-term buy and hold, but I did this a couple days ago. NLR for nuclear power play, because humanity is shifting towards nuclear power. Like once India starts, building nuclear and the world starts to shift, nuclear, whether you like it or not, regardless of your politics, is the most densest form of electricity. It is a clean form of electricity as long as you don't have a meltdown. But it's looking more and more like nuclear will be the way to go. So I put on a position here in NLR. Grok said that NLR is probably the best asset when looking for a pure nuclear power play. Also, because of AI data centers and of the such, you're starting to see smaller nuclear companies that are built. There's a lot of startups that are starting to build like small nuclear reactors that can be put on a truck, like a shipping container, and you can drive it around. So that technology is pretty cool. I don't want to buy anything like that. That's too risky. And really and truly, there's only, I think, one ticker that you can even get involved in something like that. But I do think nuclear is the future. I could be wrong, obviously. So I wanted to get a nuclear play on, and I did that this week on NLR. It's above the 200-week exponential, so it is still in a longer-term uptrend. It did get close enough to oversold here a couple weeks ago for me, right? It was close enough. Now we're starting to see a little bit of a rally out of this area. So for me, as long as we don't see any significant length of time trending under 101.89, I like this higher longer term. Maybe wait for a red week to get involved or something, or watch a prior week low to get involved if you want to get involved. I just bought shares. I didn't take a trade on that. I just bought shares. How many did I buy? It looks like I bought 50 for now. What else? MP. I think that is a robots play. Robots are coming. Whether you like them or not, they are coming. I want to own at least something that is involved in the robot space. I don't exactly remember why I bought this for robots. Pull up my robots watch list. This on, I might have wrote it down somewhere. I'll have to find out why. But anyways, technically I bought it because it's holding the 200-week exponential moving average. This is a good pullback area when you start a nice rally like this. Obviously, 2025, 2026, you're starting to see more and more money roll into, you know, AI and the robot space. I want to get involved in that. So MP is a play. This is my robots watch list. These are the best companies to watch for robot investment. This is overbought. I don't want to get involved. This is getting closer to me being able to get involved. Regal. Maybe. It may not come back down to the 200. I don't know. Allegro is also another robot play. You can make the argument that the 50 is a good place to buy. I can't argue with that. I'm not going to yet because this week is just a pullback in a downtrend on the near term. You have a lot of selling pressure in the last 5 to 6 weeks. I want to get involved after we've seen at least a couple of weeks of support for the longer term hold. But just pause it, write these down, or make a watch list on your own if you want. I'm not going to go through all of them. I bought MP because technically it looked to be the best one. All right, I did not get filled on Pingu. So I'm just going to leave it there. I'm not going to chase it. I may miss Pingu. I don't care. I'm so over it. I'm so over it. This is the weekly open on Pingu. Let's make sure before I... Yes. Okay, good. Yeah. As long as Pingu is showing me signs that it can't get back above that, I do want to be bearish, but I don't want to chase it. I don't want to chase it lower because it can pull back all the way to here. And obviously, if I'm 20x levered up on a short, I'm not going to be able to hold that big of a move, right? That's a 4% rally. So I have to pick my spots. As of right now, it's trying to hold here. But I can't really justify a short entry here. Maybe I can. But, I mean, that's where I was last time, and I had to get out. So I don't want to take too many of those hits. I don't want to take too many chop stops. I hate getting chopped up in an asset. I can't stand it. It's the most annoying thing, and probably one of, if not a major reason why retail struggles. Because they get a bias, they get an idea in their head, and then they continue to try to attack the asset in that same direction. They don't allow price to tell them what's what. Last opportunity here on Pingu. If it is going to break down this weekend, then I want to see it break down from here. The sellers are the aggressors this morning on Pingu, so I definitely don't want to be a long, right? And if we look at our session volume profile and we kill the moving averages, because moving averages intraday are useless, the sellers are definitely the aggressors here. So, I mean, if you can put on a position size and get a stop up there above the high of day, and you're okay with sitting in that much of a drawdown, then you can try that. You know what I mean? Because if you're looking for the longer play or the bigger move, then if you get that, it's going to pay off. I leave that decision up to you. I like to get in tight with levered up and with small stops. This way, when I'm wrong, I can be wrong a lot, but still make money long term, because when I am right, my rights have huge winnings. I'm only losing 30, 40, 50 bucks every stop, but making anywhere between $3,000 and $1,000 on the winners. You can see how quickly I'm going to be just fine. A lot of selling pressure up here. Hardly any buying took place up here. So I imagine if Pingu did spike back up in the air today, it would be a good place to put an entry on. I just don't think you're going to get that, because the sellers are slightly aggressive here. But it hasn't gone anywhere. 1, 2, 3, 4, 5 days. You've gone nowhere. Literally just as choppy as you can be. What did we do on coin? Coin, looks like we sold a put spread. Let's go take a look at that. This will expire worthless tomorrow, which is what we want. As long as Coinbase doesn't drop under 144, we'll be fine. I think Coinbase should be okay. It's testing daily support today and bouncing off of it on an intraday basis. That's kind of a good sign. As long as it keeps doing that, we'll be fine. We just want it to stay above 144. We'll see what happens. With the rest of the stock market being bullish, I think that can happen. But I definitely don't want to hold Coinbase trades past or beyond this weekend. Going into next week, you could come to the markets Monday. If Bitcoin has a nasty fall on Saturday, Coinbase could be gapping down massively. That's why the expiration is tomorrow. That position is okay. And then that's it. So let's see. Let's go look at Cisco. Wait, no, not Cisco. What was that? Damn it. Let me go look in here real quick. Just give me a second. Let's go look at oil real quick. Oil's going down. All right. You got a nice strong spike last week, and then this week it's been selling off. Last week you had a pullback. This week you're seeing downside continuation. So if the US and Iran could freaking come to some kind of a deal, I think oil settles back under 70. I really do. I think China is assuming that is going to happen because they are starting their economy back up. They shut their economy down when the war started. Now that the war seems to be over, things look like it can get back to business as usual. So I wouldn't be anticipating much higher prices on oil. So we might be able to look for like a couple of call selling positions if I can just remember the stock ticker that I was looking at yesterday. It's not an oil specific company. It's a company that has its hands in a lot of different baskets. Oil just is one of them. Yeah, I'm having an issue. Let me see if I can find it over here. I'm not going to be able to find it. Damn it. Well, let's go look at Exxon. And then we can look at Chevron. I don't like the idea of selling calls on these. These things are super volatile. Let's go look at... Sorry. Not very much premium on these. Same here. Damn, there's nothing there. All right, I'll just send this one off. It's okay. It's a 4-to-1 risk to reward, but I'm covered on the upside if any significant volatile news happens and Chevron gets back above 192.50. Is it possible? Yeah, I mean 192.50 is just right here. It is absolutely possible, but I'm just kind of betting that in 9 days it'll be either where it is now or slightly lower. And as long as there's no war, that'll be fine. But I'm only risking $200 max anyways on the trade, so it's fine, even if I'm wrong, right? We'll send this one off. All right, probably ain't the best one to play for that. Hang on, let me see something real quick. Here, let's just go see. Well, we can't do that. Let's just ask Grok, who reported earnings yesterday. I'm not 100% sure if the company even did report. Like Silver says jewelry affairs. Yes, Silver is typically, can we take a look for sale on ETH things? So where is ETH potentially on sale? Oxy. Maybe it was Oxy I was looking at. Oxy is more of an oil company, obviously, but... Oh, it was Oxy. I actually took and got filled on that trade, so never mind. So right now I'm already losing on that one. Okay. Oh, there it is right there. Ah, Oxy. Well, obviously you might not want to take this trade now that it's in the money. That would be a bad idea, as it is short calls. Upside is protected, but big spike yesterday. Or, sorry, right now. Big spike right now. Today. When is that expiration? Tomorrow? That's fine. Yeah, maybe that ain't the best play in the world. And there really ain't nothing to do above it. There's not enough premium up here, so I wouldn't even worry about it. Anyways, never mind. Yeah, okay, so potentially where is Ethereum on sale? Ethereum kind of makes money, but I kind of feel the same way I do about Bitcoin, right? When it comes to the rest of the crypto market. So right now, because there's massive headwind risks for Bitcoin, even if those risks don't affect Ethereum, just because the way the crypto market works is so many liquidity providers that are in Bitcoin are also in Ethereum. This is why a lot of times when Bitcoin is down significantly, the majority of the crypto market is also down. So because of that, if Bitcoin were to make fresh year lows, I think Ethereum could potentially do the same thing. But in terms of, is it on sale or not? Yeah. Has Ethereum performed as good as Bitcoin? No. So Ethereum is kind of hit or miss. If you look at the ETH versus Bitcoin chart, you can clearly see here that long-term Bitcoin outperforms Ethereum. Occasionally, there are volatility spikes in ETH where ETH does better than Bitcoin, but those spikes are usually short-lived. I see no reason for this to continue into the future, mainly because most of the major financial players that have come to Bitcoin, specifically this year, right? There's been a lot of banks starting to open positions in Bitcoin to create credit products around Bitcoin. They aren't doing that in Ethereum. Some have taken a little bit of an Ethereum position, but not all of them. So, in my opinion, which I could be really, really wrong here, because at least Ethereum makes money on gas fees, that could potentially be attractive to some long-term investors. Whereas Bitcoin doesn't really do anything. I mean, you can make the argument that there is potential for Ethereum. I don't think crypto is dead. I think crypto is here to stay for a very long time. Could ETH break out eventually and start outperforming Bitcoin? I guess it's possible. Anything is possible. But is it on sale is the question. I would have to say it is on sale here. ETH has struggled to break out above $4,000, $5,000. But it's 61% off. So in the past, it has gone as low as 80% off. Could that happen again? Yes. So you just have to ask yourself, when do you want to start getting involved? If Bitcoin has more downside to come with the headwind macro risks, BIP 110, Fed hikes, blah, 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 right? Those things, strong dollar, could all affect Bitcoin and Ethereum going into next year. So maybe wait till November, see if Bitcoin builds in a floor or if it has built in a floor. because we don't know that the 4-year cycle is broken. We just know that things are situated with the macro backdrop that it could potentially break it. Like I said, Bitcoin usually is supposed to make lows October, November. I would assume Ethereum does the same. November 2022 was the low. ETH went on to do good things after November 2022. You're in a 4-year market cycle now, so November 2026, if you're making fresh lows, maybe you could start trying to dabble or tip your toe in. I wouldn't go in balls deep with a position, but you could definitely start accumulating slowly over time. But eventually you're going to want to see it bounce and hold at support. The best indicators for any investor to see if that is happening is the 50-day exponential moving average. People have gotten away from it. I know it's a boomer indicator. I get it. But they are very good because they work. They are trending indicators. So until you're holding support at least the daily 50, it's probably not the best investment idea for the long term. You can argue that Ethereum is doing that now. So you do not want to see any day closes under $1,800. If you lose $1,800 on a daily closing basis and see continuation of that, that would not be a good sign. That would be the opposite of that. That would be a bad sign. But as of right now, it does appear that ETH is at least at the bare minimum trying to hold support. Here's what I can say. I can't tell you what's going to happen in the future. I can't tell you if the lows are in on ETH. What I can tell you is most likely if the lows are not in, it will be a violent break under the 50. It won't be a small little pansy candle. All right. You'll probably be able to look at the chart and be like, oh yeah, this is going lower, right? That's most likely what would happen. So ETH could like get back up here and then puke. That's the issue. So if that happened, you would have a candle that looks something like this. If you get a candle that looks like this in the future, yeah, I would say that that 50 is toast. So keep an eye out for something like that. I still do like Euro Pound. If you were listening to me last week and earlier this week on the Euro Pound short, the reason we like Euro Pound to go lower, it is in a downtrend on the daily and weekly time frames. You are in a downtrend here. You've made fresh yearly lows. We were looking at this as a dead cat bounce or a short covering rally, and we were anticipating that you would see more downside pressure on euro versus pound specifically because the US dollar or because the US Treasury or Fed is selling euros specifically to buy Japanese yen. They're not selling their pound investment or their Bitcoin or anything else to buy yen. They're specifically selling euros. And since euro has more of a weighting inside of the DXY basket, we figured that this would ultimately fade. It is starting to do that now, as you've got a bearish engulfing daily candle. So moving on, I would definitely want to see daily supply at least act as resistance. And if it can do that, this is daily supply, 85,713. If it can do that, I would be willing to put on one final short trade. Pingu is spiking. Pingu is spiking. Let's see what it does here. Odd that Pingu is spiking on a day that the dollar is also moving back to the upside. But whatever. And DXY also moving to the upside. Now there is no dollar correlation right now with Pingu. We can go look at the correlation coefficient indicator. It is right here. So this is your correlation coefficient. 0 means there is no correlation whatsoever, not inverse and not correlated. It means nothing. So that's the reason we can see dollar upside and upside on Pingu. But if the dollar firms up, then we think the inverse correlation will start to come back into some of these pairs. But for right now, it's being a little bit difficult. So I am filled on a short. 4-hour supply test. It needs to fail here. If it continues to rally today, I'll be stopped out and I will be done with this stupid piece of garbage. It needs to roll over from here. It must roll over from here for me to continue to want to even trade it. Pingu has a bad habit of spiking aggressively to the upside, so make sure you have stops out if you're trying to short it. It hasn't lost this dead cat bounce rally yet, or this, short squeeze. It hasn't really lost it. I guess it has if you look at it like that. You already have a lower high here, so hopefully the sellers will come lower and jump on it in this area. This candle right here literally cuts the tops off of all of these other candles except for these right here. So basically, this candle's got 1 hour and 6 minutes left on it. I do not want to see a close above this price. 62.05. If you get a 4-hour close above 62.05, it can go up higher. If it doesn't close above that, I will continue to try to sell it. Okay. All right, back over here to the stock market. Let's go look at our SpaceX positioning. We've got 1 day left on this. We're 2 contracts deep on a short here on a put spread. So basically, we don't want to see this thing break down today or tomorrow. If you're in this trade, if you took it with us the other day, right now, you should have pretty close to most of the profits. So our trade price was $269 on SpaceX. I took 2 contracts, so that's double. So for me, max profit would be about $500. We currently have $330 worth of profit on it, so better than half. Because today you could not break out above yesterday's high, you are threatening a lower run. So I will feel safe and I will hold this position going into tomorrow only if SpaceX can break above yesterday's high. If it can't do that today, I will most likely close this trade. Because tomorrow we could get, if the sellers are selling it up here at yesterday's high, let's go look at it intraday. So here's yesterday's high. You got to run lower here and then a spike. So if this spike is where the sellers jumped on it, and if price continues to fall, then there's a real good chance you have a gap down tomorrow. So your profit will be much smaller because you will have one leg of that. Your short put will be in the money. Give me a break. Thank you. We also, this is an iron condor play. So the call side is pretty much gone. The premium on the call side is gone. We were trying to extract the IV out of this. When we took the trade, IV was up at 215. And we were just looking to extract the IV. The IV has fallen, but it's still very high. So it's going to go down to the wire if you are trying to extract that last little bit of profit out of the trade. A safe bet would be to just go ahead and close it and leave a little bit of money on the table. You've got better than half of the profit. That's not a bad trade. That's a good trade, good win. All right? Good trade. So I'll let you decide what to do there. Let's go take a look at oil. Gold. Gold's still chopping as an inside day. We know oil is down today. What about the NDX? So it did make it up there to yesterday's open. That's probably all I would have been expecting out of today. I would have taken profits on that. That's the bounce I was looking for. This chart looks like, I don't like this ticker. Let's go to the US 100 as it's tracking the futures. It's a pretty nice bounce, you know what I mean? That would have been to the extent of what I was looking for on the day trade. You got it, move it on. I wouldn't be looking for like 3 more candles like that. I would be taking profits right now and closing that trade. I do think you will get more upside, but only if tomorrow's news is good, because you are getting a liquidity injection in the form of yen intervention. So we do have an upside bias on this, but you're also into resistance. And big news event tomorrow. Big news event tomorrow. But this is a really good looking chart. Really good looking chart. This is an even better looking chart. You have a full-on breakout here. Looks good. I see no reason for that to stop. But with that being said, I don't necessarily want to be a buyer on this one because it's already broken out to fresh all-time highs. You are squeezing shorts right now, so chances are that could continue. That could continue. We have not had a bearish bias on risk for a while. We still do not. We still do not. Now, I don't know how stocks are probably going to go up even if the Fed hikes, but they could be choppy to up. If the Fed starts to dial back on asset purchases, then naturally it could be a choppy index. but I would be buying dips. I don't think the AI trade is done yet. I mean, there's proof that the AI trade isn't done yet. Right there, staring you in the face. But, all right, so it doesn't look like gold's going to give us an opportunity today, but we did take a gold position in GOD. We shorted puts. That's what we're going to continue to do in this until we can actually get a position. We're going to be looking to extract some premiums out of it until we get a full position size going here in gold. Silver, I like silver because silver is usually more volatile than gold. But when it comes to the Chinese economy, I think it's mainly gold. However, I mean, if gold rallies, silver usually not, I wouldn't say it follows it, but it does typically do good. I mean, yesterday, silver did really good. Was it as good as gold? No. But it's good. And you can see, like right now, gold is up, silver is down. So could we potentially look for silver longs? Yeah. Do you have a breakout on silver? No. You do not. I do like, one thing that I do like about silver more than gold is silver did at a bare minimum liquidate the lows. I think gold did too though, didn't it? No, I don't know. Let's see. Yeah, no, it did not. But I mean, that's so close. Fair enough. If you would rather play silver than gold, I mean, I'm not going to say that's a bad idea or anything. However, so like for me, the way I would do it, I would take the signal on gold. And the signal is, as long as the war in the Middle East is done, China's economy's spinning back up, that will be bullish for gold. That's the signal. It says nothing about silver. It's for gold. But if you also want to, if you think that it's going to positively affect silver, then you can try it, but I would be heavier, or I would have a heavier position in gold. I would allocate a much smaller portion of my portfolio to the silver long. But at least silver's pulling back. It's same, like it's kind of the same thing that we were looking at on the NASDAQ, a midpoint retest. But gold just looks better. Gold is testing its 200-day as resistance. Silver is only testing its 50-day. See that? Gold was much better. It looks much better. Moving forward on silver, if it can retest the 21-day and hold as support, 59.51, I could put a small position on silver. 59.51. Well, it says 59.40, but that's as low as I would want to see silver go. If it broke under that and started to trend, I would forget about silver. Silver is used a lot more in products that are in the economy than gold is. Silver is not really known as an inflation hedge. It's like a tag-along play. It's similar to like buying a shitload of Bitcoin and then also getting in an alt. In this case, silver's the alt. It could go up because of gold if gold continues to go up. And we think gold is going to go up. I just don't want to buy gold at a prior day's high. I want to buy it at a prior day's low. It may not give me that chance. At least silver's pulling back here. So I could probably take a trade on silver if it gives me a setup. What would the setup be on silver for me? It cannot go lower than today's low. For a day trade scalp setup, I don't know if you're going to even come back down here today, but if it did and rejected there or set a higher low, like for instance, instead of liquidating the last 4-hour low, maybe it just comes down to like 61.41 or something. If it could stay up there, then I could potentially look for longs on silver. I don't have a trade set up on silver right this second. If that makes any sense. Like, I don't want to take the entry up here at close to the daily open. I would rather get in as close to the day low as possible. All right. 72 silver soon. It's possible for sure. Filou, Trump's in Iran to have more control over oil to stop Chinese and Russian to take over. Always been about oil. Yeah, I agree. Trump is trying to assert the U.S.'s dominance, but unfortunately the U.S. is in a very precarious financial position because of politicians spending like drunken sailors. Because the policies they keep running are inflating the dollar away. Because of that, Trump feels as if though he has to do what he's done. And is it the right thing to do? Will history look back on this period and say he made the right decision? That's to be determined. I hardly think that the answer to that is probably going to be no. Like, he has fumbled it for sure. Absolutely. Absolutely. He has done it in a way that has put his political opponents against him, given them talking points to use for this entire mid-term election. You're going to constantly... Trump also, like, literally created a shit coin and then dumped it on the American people's head. Trump is very quickly losing the momentum he had going into the election. And then he begins to do only one thing that I can think of from his campaign promises has the man done and done well, and that's been deport illegal. That's it. Like, that's it. He did that. He didn't get any crypto bill done yet, like he said he was. He specifically said no more wars, like 1,000,000 times, and did that. Check. He is helping the Democrats win the election for the midterms. So I don't understand why he did what he did. He's obviously in it for himself, like all politicians. They only care about themselves and the people that help them get to where they are. That's it. Everybody else can go walk a plank. Politics suck. I hate it. I don't like talking about it, but some of the things we have to based on the way we invest or the trades we take. All right. Let me go look for some trades, and then we'll wrap this up. We've got a couple things on. I want to look at the positions watch list real fast. Come over here and do it on the IWM. O'Reilly is something that I would like to get involved in. I kind of fumbled the entry on this. This would have been the best place to look for entries on O'Reilly, and I missed out on that. I'm not going to be doing anything with it up here at last month's high. I would love a deeper correction. If I could do something at 85, I will on O'Reilly. This is obviously not anything here. UPS. What's Up's doing? This is a dividend stock as well. Longer term inner range, testing the 200 day. So I'd love it if it could hold that. It didn't the last 2 times, but the last 2 times there wasn't any downside pressure after either. So I could make the argument that if UPS stops going down from here, I might be able to look for trades on it. So let's go look at some put positions on it. No dividend or earnings risk upcoming. Not much premium here on the near term. But we got 8 days. So the 200 is at 104, right? 105 exactly. Do we think that UPS will hold the 200 day as support? You're at July's open. Okay, so we could do a really nice trade here potentially, right? Because we are at an area that we would want to see the buyers defend. Let me check. The low on July is 102.83, so 283. So it's a double bottom. Okay. So you literally have 102.83 marking the low for June and July. So there might be a liquidation of that level because it's a double bottom. So we could wait for that, put the position on, or because we have time on our side, we can go ahead and fill a position on it now. Let's go check out what the 30-day options look like. And remember, 105 is where that is. So there's good premium on it. The spreads are a little bit wider than I like. 35 cents up there. 40 is where I cut it off. If it's 40 cents or wider, I usually won't take the trade. It is real close to that cutoff. So what would it look like if we sold the at the money? So what does it look like to sell that? That's not bad. That is not bad at all. And basically all we're saying here is we think that in 29 days, UPS will be above 105. We'll be completely wrong if you break under this and start trending. So that's why we don't want, right, anything under 100. We're wrong. But by the end of August, if you bounce out of this area and get up here, that will be a victorious trade. I would much rather put on a big size like this if it had already liquidated. but because it hasn't, I'm going to go in with 1 for now, and then I will add maybe to this position later on. But I do like it here if it can hold. I do like it here. And do I want to own UPS at this price? Because that might be a better trade. Ah, man, they've been getting killed for the last 1, 2, 3, 4, 5 years. Still very much in a downtrend here. On the quarter, it looks like it is trying to recover. Let's see what the analysts say about this. "32 analysts have given this stock a rating in the past 3 months. So 13 say it's a strong buy. 14 say it's a buy and hold, or hold it if you own it. But there's 4 that say it's a sell. You can see that they have been losing money for the last 3 years. Longer term forecast is this year it's supposed to bottom out, and then they're supposed to start making money again next year. So far in 2026, quarterly earnings have been going up, but they didn't have very good. Next quarter, the estimate went down. The guidance wasn't great. Let's just worry about the trade for now, and then we'll figure out if we want to own it. So we'll just do a spread on instead of just selling the outright put, right? Just selling the put, because we would be okay with getting filled at this price for the long-term buy and hold. Not right now. So we'll just go ahead and put the spread on for a longer term, and we're protected under 100. It's a 1-to-1 risk to reward, and very seldom can you do that. So I like the trade. All right. Back to the UPS chart. UNH, I already got a small position near term on that. Circle, I want to stay away from anything that has to do with Bitcoin for now until the BIP 110 stuff is in the rearview mirror. Once it's in the rearview mirror completely, and if we get beyond that and Bitcoin is still, above 60K, then we'll start to put on some of these other things like Circle or anything that has to do with Bitcoin. FedEx is obviously doing a lot better than UPS. Damn, Nancy Pelosi's favorite stock went to the moon, didn't it? Damn. This thing got real good news with the UFC. I thought that would help it hold support, and it did not. So I don't know why Paramount can't make money. Nike. Oh, the glory that you once held as a shoe company. I bought a pair of walking shoes the other day, and they were just as, if not more comfortable than any Nike shoe I've ever owned. Brooks was the name of that. I paid Nike prices for them things though. 175 for a pair of Brooks tennis shoes. But I like them. They're freaking comfortable, man. They're light, really comfortable. The Nike's got a lot of competition. They got to straighten up, or they're going to be a laughing stock. I mean, how do you do that, bro? Damn. What's Enphase doing? I used to keep an eye on Enphase. It used to be very volatile. Nothing still. All right. FXI rallying here. This is China ETF. This could also be a longer term investment or a longer term play. I don't want to buy it now because it's already rallied a lot. I want to see a pullback. If it could get back down to 31, I would probably get involved because they're spinning up their economy. So this might be something to take a look at. There are other plays like Baba or JD.com, KWeb. Same on all of those. Let's go look at Baba. Because Baba has options. Baba, 8 days. Yeah, it's still the same. I would want at least a midpoint check of July's range first. I mean, on a year-over-year basis, it looks fine, right? For the last couple of years. Obviously, there was some nastiness back then. But since the pandemic, it has built in a longer term support, and year over year has done okay. 24, 25. Not bad. Now it's down in 2026. It's retesting the yearly opening range right now. No, it ain't. Right there's the year open. Dummy! Sorry, I was looking down here. Are the yearly lows in? Maybe. Quarterly doesn't look great. So, yeah, midpoint, if it can hold the midpoint of July's range, 108-ish. If it can build in support there, I am going to put on a trade. So let's go ahead and add an alert here. Yeah, weekly's got some work to do. Ooh, daily 50. Yeah. Yep. So this is about as low as I would want to see it go on this pullback from the 200-day. Naturally, I anticipate resistance here. If it pulls back, I will get involved down here. Oh, Baba on the watch list. Get an alert. Let's move the alert up so that way we know to be at least watching it. JD.com. Another Chinese play. Looking a lot better than Baba, but still same thing. I can't do anything unless it pulls back. I'm not going to do anything for some time. I just want to see options. I like Baba the best for the options trade. So we'll wait for Baba to pull back. If you have something that is literally setting up, let me know. We will go look at it. The metals company, this is one that we were watching. It did come back to our 350 price, but that's where I would have been wanting to buy it. I didn't add to the position though here because this is where I originally got involved. Actually, I don't even think I don't have my main portfolio open, so I'm not even sure if I'm still in this. I want to say I probably closed this out or took profits or something. But it did come back to 350. As long as 350 holds, I like this longer term. But we were supposed to already get news on whether or not if they were going to be able to mine those little stones at the bottom of the ocean. I want to be owning it before they get the okay, because if they ever do get the okay to mine and then they start making money, this will go higher. It looks like all of the hype on it has died down, so that's what we want. So as long as it can stay above 350, I don't mind owning it. It is a cheap stock and has the potential to be very volatile in the future to the upside, but it has the exact same volatility to the downside, unfortunately. So only invest in this one with an amount of money you can afford to lose. I'm not worried about the options on this. Obviously, this is a cheap enough company to just buy and hold shares on, no leverage. They have invested a lot of money into mining those rocks. Once they start mining, you will start to see profits come out of that. I think the stock could go higher. I honestly did not think it would get to as high as it did back in the past. But I mean, once it gets the okay to mine, I think it could exceed that. This is a one to set and forget, but obviously set stops. You don't want to ride this one to zero. And then if gold holds support, I expect AU to go higher as well. This is a gold mining company. They rallied real nice with gold when gold was rallying. March the 2nd is when China literally slowed their economy down. March the 2nd kind of marks the high on the miners. Now that China is spanning their economy back up again, I think the miners could do good as long as gold continues to go higher. Bullish bias on gold. I have a bullish bias on AU. Anglo Ashanti. AEM is another gold miner. I like AU better. But I feel the same on both of these. So 155 on AEM. If it can hold that, I would be bullish. And I would go as low as 82 for AU because I like AU better. I can't do anything with them today. They're at highs. AU doesn't have weeklies. And their options are not really tradable. Oh. Ooh, spreads are wide on this one, but much more premium. It's a more volatile stock. Let me check its chart one more time. 157.97. So that would be these down here. There's not a lot of open interest on this. Why do I have two categories of open interest? I know why. It's because I have a laptop, and on my laptop, this is the last category. Damn. A risk goes way up, but profit doesn't. Yeah, if it could pull back and test that, I would feel more comfortable about selling naked on this. Not yet. Let it pull back some. But these definitely go on watch. A split has occurred on Carvana, huh? Might be able to sell some calls on this. CVNA. So at 75, I know I'm wrong. So I know I'm wrong there. And they're just not. All right, I'm going to put this one on as well, Carvana. All I'm looking at is risk to reward. Damn it. What did I do? So basically, I see us into resistance here. I'll be wrong if it breaks out above 75. So I want to protect my risk up at 75 bucks, essentially. Because if it breaks out here, essentially this will, I mean, you did get a pretty deep down move here, and that was a rejection. So the buyers showed up. This trade, it doesn't look great because the buyers showed up. You got another run back up to the 200 where the sellers showed up again. You got a nice gap down, liquidation on these lows, and then immediately right back up to the 200. So maybe not. Maybe we'll leave this alone. But maybe it's looking to liquidate the top side of the range and then fall back down. Maybe wait for that to happen first. Or if it spends more than, say, 3 or 4 days, it's already been spending 3 days here of failing to break out. So maybe give it a couple more days. If in a couple more days it can't break out, we'll put the trade on. If it breaks out, leave it alone. Wait for the liquidation. And then if it fails, then you can put this trade on. Gotta find something to trade, man. I don't know why cats. I mean, cats. I know why. Never mind. I was about to say I don't know why cats up so much on AI news, but it is. Leave that alone. It's trading as an AI stock right now. It's very volatile. It's super expensive. A lot of risk on that one. This looks like it could be a short squeeze on the near term. It's into resistance or potential resistance. It just reported earnings, so. eBay has, no, it reported yesterday. Fastenal just prints money. We got a position in General Mills. If it can hold the 50, I like it higher. It's in the process of trying to do that right now. So you could potentially take a position on General Mills if you're not in one. I'm pretty sure I own shares. I didn't take a trade on it. Wait a minute. I don't have anything on GIS. So if it breaks and trends under 35, so that's my risk. I'll be mad if it holds support and I don't own it because they pay a dividend. They've been getting beat up for years. 5 years? 4 years. 1, 2, 3, 4. I think it's probably getting close to the extent of the sell-off. I could be wrong. Yeah, analysts don't love it. So let's just trade it for now. Putting a position on, I'm going to sell the 37.50. I'm going to buy the 35 strike. Basically what I'm saying is the 50 will hold support for the next 15 days. And then obviously if you break down under 35, I'm wrong. That's General Mills. GIS is the ticker. You can do it however you want. You can buy shares. It's testing the 50-day exponential moving average. It's building in a longer term. It's a cuff and handle formation is what we're looking at, right? Well, there's your cup. And then you want to see a smaller handle. So if it can rally, we want to see it rally out of here. If it can do that, then we can say that potentially buyers are buying it. They like it at these prices. I'm willing to put a trade on here. But longer term, I think this is potentially a long-term buy and hold. It's actually one of my favorite stocks right now. But if it loses 35, I don't want to be in it because it could be looking to set fresh year lows. It's still obviously really bearish. Really bearish. But General Mills is it's not even a company anymore. It's a conglomerate. So many businesses rolled up into one. And that's the reason it got hammered. It bought a lot of companies that brought a lot of debt with them. It used to be a favorite in America in terms of owning for stock. Look at this. It has a fabulous price chart, or it did at one point in time. Naturally, everything took a beating. And through here, people actually bought it up through the pandemic. They own Johnson & Johnson, baby. I haven't done any deep dive into it. I know it as a conglomerate. It's massively bearish. There's no reason to expect that trend to break here other than a longer term accumulation. It's been building in a multi-month support. That's it. That's the reason. It's the only reason. If it can continue to hold the daily 50 exponential, that could speak to repair. And I'd be willing to spend a little bit of money to see if they can hold that, right? If they can hold here, I probably will buy shares. But I'm already filled on the position. I sold the 37.50 strike put, and I bought the 35 strike put to protect my downside. It's a 1-to-1 risk to reward. Anytime that you can get into a premium selling position with a 1-to-1 risk to reward, that's a pretty damn good trade. And as you can see right here, based on open interest, I'm not the only one that sees this. A lot of people see this. A lot of contracts have been taken here. So it's a good risk to reward. It's a good trade. Whether it wins or loses, it doesn't matter. It's a good trade. All right. Goldman Sachs. Damn. Too risky. Goldman Sachs been crushing it. Johnson & Johnson has been crushing it. So obviously General Mills doesn't own Johnson & Johnson. Lululemon. The hell is that? Is that a VWAP? It damn sure is. What is this? What are you listening to? Negative. Lululemon, I mean, they sell sweatpants amongst a bunch of other stuff. This was a favorite after the pandemic. It absolutely went to the moon and has been smashed. I would say this is due to competition more than it is people quit doing yoga. I think Americans quit spending stupid money. If you're going to buy yoga pants, why spend $300 on a pair, right? Now, if the U.S. ever gets its shit together and starts to make people feel rich again, then obviously this would be a decent place to buy it. I just don't think that time is now. Longer term, you've got a very small range breakout. But I would say that's due to inactivity more than it is due to a longer term bottom. Yeah, it's due to lack of sell. That's what it is, lack of sellers. At any point, they can show back up. So for now, Lulu stays on the chopping block. Mickey D's suffering right now because they are no longer a fast food restaurant. They still are a fast food restaurant, but they have premium prices and they're not a premium product. Maybe if they change that in the future, they get their stuff together. Let's just look at what the analysts have to say, because I'm just a price action analyst. This price action doesn't look great. Only one seller out of 38 analysts. Okay. That's something. It's been building in bullish divergence. All right, let's see what we can do under 264. That's our risk, right? That's weekly support. So if price breaks down under, we're talking about McDonald's. If price breaks under 264, we are wrong. I doubt 264 is a strike, so we'll call it 265. We don't want to hold this through dividends, so very low implied volatility on this thing. So basically we're just selling time 2 weeks out. 265 is our risk, so we have to be long there. $270. And it's not as good as a 1-to-1. But once again, a lot of people like this trade. There's your open interest. They're putting this exact same trade on. And for that reason, why not? Sent. I don't know if I'll get filled, but I'm sending it. That's McDonald's. Bullish divergence on the weekly RSI here. You're under the weekly 200. Not a lot of downside pressure under the weekly 200. If we go back and look in historical data, ignoring the pandemic, because that's an outlier, this has been a decent place to get involved on longs on McDonald's. So for those reasons, we'll put some risk on. MDB, Melly, if, like I said, guys, for anybody that's just showing up, because we've been going live for a little while now, if you have a stock, I am occasionally looking at the comments, let me know. Your ADA call the other day is playing out so good now. It was the only one that was bullish. It was the only one that was bullish. Looks good. We wanted to be long at 18. Oh, 18. What is that? 18.045 on a pullback. I think we talked about it on this day. So naturally, I would have kept alongside bias on it as long as you didn't break under and start trending from there. So kudos. Hopefully you made money on that. I would start taking profits. Yep. I would start taking profits. You're into the midpoint of this range. You're above last month's high. Literally anything above last month's high is all icing on the cake. I would definitely be taking profits. Because I wish BIP 110 was over with. If BIP 110 was over with and I seen this kind of price action, I would be extremely happy. I wouldn't be quite bullish on it yet, but yeah, it looks good. It looks okay. Dollar is holding as resistance. You're overbought. Start scaling out. Jim Kramer says buy SpaceX. Oh shit. We should sell SpaceX then. We should get out of this trade right now. If Jim Kramer is reporting buy it, let's dump this. 376. I'm at 75% of the profit. I can get all of the profit by tomorrow at lunch. So do I want to risk a potential loss? Here's what I'll do. If it can hold support on an intraday basis, as long as it stays above 105, we'll get all the premium. We'll get it all. But if it loses support, I'm gonna bail. I'm gonna take it off because I got 75% of the trade. I didn't get filled on Mickey D's. What's going on here? There we go. You might have to give them a penny. Market makers are freaking penny pinching fools, man. Give them a penny, you'll get filled. All right, what was the last one we looked at? Mickey D's. Someone asked about now the other day. If it can hold the 50-day exponential, maybe. It's a software company, and they got beat up during the SaaS apocalypse. So be careful. AI is potentially going to eat their lunch if they can get their stuff together. I would say watch the 50-day. If you lose that, I wouldn't want to be in on it. If it was closer to the 50-day, I'd put a position on it. It's just too far away for me to do anything with it right here. Sorry. All right. Palantir crushed it on earnings the other day. I don't want to be involved with it right now. I would say a call position would be what I would do on it, but are you going to break out anytime soon? I mean, it's possible with new liquidity injections. And new liquidity injections are a possibility. This piece of garbage, man. I can't believe you're doing this to me. Whatever. Liquidity injections are a possibility as long as this is moving to the upside. So for those reasons, I do not want to be short Palantir. Reddit hasn't been a ticker long enough to... Well, to be fair, it has been in service for a little while now. Why is Reddit not making money? I mean... It's in a range. There's really nothing to do here. You're at monthly support. If you didn't have this bearish monthly engulfing with this midpoint retest failure, I would like it. But I can't do anything with it until it gets back down to July's low. If it gets down to July's low, liquidates it, and holds, I will potentially sell some puts on it. But until that happens, I can't do anything. Starbucks is reporting... Oh, they already reported. Wait, didn't Starbucks inherit the CEO from the burrito company? Or something like that? Didn't they bring a new CEO into Starbucks to kind of help them get their stuff together? They face the same problem, in my opinion, as Lululemon. They're selling a massive premium product. Massively premium. I mean, $8, $10 for coffee. People are going to stop doing that when they feel broke. They just will. So you're going to have to slash prices. Investors won't like that. Or figure out another reason. But he is a genius. If anybody can right this ship, it is him. Chipotle. I could be wrong. It could be a different guy. But I heard it on Bloomberg the other day. They were talking about it. Technically, this looks fine for breakout potential. Yeah, technically, this looks good for breakout potential. I would argue that 101 is the risk. Let's go take a look at this. I don't even remember the freaking ticker that quick. S-Bucks, you dumbass. I never trade this. There's dividend risk. I can't do anything with this. Not with dividend risk right around the corner. If there wasn't dividend risk, I would try it. But there's more out there. Trust me. We've just... Target. Let's go see what Target. Target's not tradable up here. Uber. Uber is tradable if there's premium. 66 is the risk. Let's go look at Uber. That's the risk. That's our long strike. Where is the averages? 68. We can try it. It's a small one, but... What if we get... Yeah, that screws everything up. Dude, look at this spread. This is better. But 70 is a lot different. It's at 70 right now. Yeah, I like this trade. I like this. We're going to sell the 70s. It's a 48 delta. It's not a high probable scenario, but our risk is capped at 304. There's no reason why in 15 days could Starbucks be trading above 70. It absolutely could. It absolutely could. And I like what I'm seeing this week so far. It's already traded down into the risk. It's already traded down into that and is backing away. I can't predict the future, but I can say, yeah, I can live with that risk. We'll give it a second, see if we get filled. If not, we'll move on. But we'll send it one more time. We're not going to get filled. Let's give them a penny. These cheap bastards. They must be listening to us. Give them a penny. And just like that, filled. Ulta, Workday. I already got. Archer is a drone company. It's a U.S. drone company. I remember when everybody was talking about drones back in the end of 2024. Nobody's talking about them now. I thought they won a bunch of U.S. contracts. This would be this is way too cheap. These are all drone companies. D-Pro, UMAC. No, UMAC is not. Oh, it might be. I know Archer and D-Pro, Dragonfly, drone companies that did not work out for the long term. Not yet. Rocket Labs. It held the 200-day. The last few times it tested it. It lost it this time, but it's trying to reclaim it. But the unfortunate thing about this scenario is it might find resistance at 85 and then retest 57 again. So I would only be interested in this is if it was down here, closer to the risk. This spread would be too wide. The risk to reward would not be good. And Walmart, last one we're going to look at. Same thing. They're feeling the pinch from consumers right now. They've got earnings coming up soon. So probably a lot of sideways price action on Walmart, at least until earnings. Let's see if we can get one in the middle there. WMT. Might be able to... Where's the risk? 110. You lose that, it's probably toast. So right there's the risk. So we would definitely want to be long there. 113 is the weekly 50. So that's resistance. It's almost a 1-for-1. For that reason, I'll send it. And I'm done. That's all. All right. Now, obviously, some of those will win. Some of them will lose. Some of them will... All of them could lose. And all of them could win. We don't know. Trade small, trade a lot. You know what I mean? Trade small, trade a lot. And there we go. Got quite a bit of stuff working over here. We'll give some of that time and all of that. You know how it goes. You know what to do. Yep. I'm going to keep SpaceX on watch. If it loses intraday support, I will bail on it because I'm at 75% profit right now. There's no point in pushing this into tomorrow. It does look like the buyers are trying to defend, but not really. And Jim Cramer has a freaking amazing hit rate when it comes to do the opposite of what he says. So let's just go ahead and get out of SpaceX. 75% of the profit's good enough. All right, what's going on here? All right, let's go over here and see what's what. Yeah, we want to close the whole thing. We'll give them a penny to get a fill. Well, we're actually giving them $4, but we want the fill. Bam! SpaceX was successful. Done with that. Nice. Yeah, we'll see what happens with the rest of them there. Gonna take some time, but quickly let's look at the NASDAQ. See what it's done here. Yeah, it found resistance at yesterday's close. I kind of figured it would. Tomorrow is non-farm payrolls. So tomorrow, as long as you're not like breaking down below the current day low today, I would like NASDAQ tomorrow for the long. So tomorrow you may be able to watch NASDAQ around the not earnings, but around the non-farm payrolls print to see if you get a liquidation break back to the upside. We'll see, but I still like it higher. I just am done for the day. I've lost $355 on this morning, scalping it a couple times. The fat finger was the reason for that much of a loss. I generally don't lose $300 a day. I try to keep that at about 100. So obviously lost more than I wanted to today. I fat fingered an entry. I tried to get out, but actually filled double the size. And then it just got away from us real quick as it was pushing on the lows. That's what you never want to be involved in, but it does happen. Anyways, you guys make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.